Hello from ADK Wealth Advisory Group in St. Louis to our ADK community and beyond. Today's video is really going to focus in on the financial markets in the backdrop of the upcoming election. We'll look at some history, we'll look at some possible outcomes. Start with an opinion piece that was in the New York Times September 21st. Mr. Schramm was really looking at going back to the 1860s up to modern elections. And the quotes that I'm going to share with you, I really would like you to sort of contemplate as the heat of the election and election uncertainty really do sort of amp up over the coming weeks and maybe even months, unfortunately. And the title of his article is the stock market rooting for Trump or Biden? First quote, neither. The stock market is a lot less partisan than you may think. The second quote, and I'll read, the market's an economic barometer, not a political one. To be sure, its collective mind pays attention to presidential politics, but is one of many factors that influence the direction of the economy. The leader that the markets listen to most carefully is the Federal Reserve, not the president. I really do believe both of those points. When I was probably year two, so call it 30 years ago in the business, I was listening to one of the best money managers that we had used up to that point, and he said one of the key learnings he had early on was not to allow your political bias to influence your belief of what's going to be happening. And what he then said is, if you're a Democrat and the Republicans win, you think the world's going to fall apart. If you're a Republican and the Democrats win, guess what? You think the world's going to fall apart. And I've observed that with the clients that we serve, because we serve families that are Democrats, families that are Republicans, and some that are neither, that vote both ways purely based on candidates. So if we kind of go back into the history of things and look, if you go back into the 1800s, you really see this phrase called contingent election. Contingent election, as many of you are aware of, is the neither candidate or candidates receive enough majority electoral college votes to be able to have the majority. And so then the House of Representatives steps in, has to vote. I've heard people say that Pelosi would have to make that decision, but it's actually a vote. Not each representative gets a vote. If you're interested, I found it pretty fascinating. Go in and Google, look how it works out. If you look at the election of 1800, you had Jefferson defeat Burr and John Adams. Then if you go to 1824, you had John Quincy Adams defeat General Jackson. That one was even more heated. And the interesting thing was it was a real concern that General Jackson was going to ride into Washington and kill the president-elect and Clay. So as crazy and as contentious as this election has been, I haven't heard anyone fearing that either party was going to have someone killing the other. When I take a look at economics and financial markets, there's really no data that goes back into that period that's reliable. It was interesting for me when I looked back at when Charles Dow put in place what we now know as the Dow Jones Index. That wasn't until 1894. So going back into the 1800s, just no real index to even follow in the stock market. So if you come to more modern times, you look at the election in 2000 between Bush and Gore, where the Florida Supreme Court, ultimately the U.S. Supreme Court, took over a month to make some decisions where obviously Bush ended up victorious. I could see scenarios where we have a contingent election. I could see scenarios where we have different court battles, whether it's the Supreme Court or not, it's hard to say. If I look at the 2000 election and I kind of compare it to today, there's some similarities, but there's more dissimilarities. Similarity one, both had a bear market where the stock market dropped precipitously. In 2000, that continued through the election. In current reality, we know that that was a 4-week drop, and now we're above where we started. There's more dissimilarities. So, for example, we were late in an economic cycle in 2000, where here we've already gone end and had a recession. It's LPL Research's opinion that the recession is over, the damage was deep, and that we're having very slow recovery. That's a key difference. The main difference to me is if you go back to March of 2000, Greenspan was raising rates, so tightening from the Federal Reserve. Now we have Powell and his team loosening. You heard in my last video the concept of stimulus and how significant it is. That is, to me, a big, big difference. I would say that really, if I look backwards at elections and then I look at this current, I would summarize with the cliche statement that we're sailing in uncharted waters. From that, just like as always, we'll be really spending a lot of time researching and making some intelligent guesses on how to properly navigate through these uncharted waters. Staying in the present, what is it that we know? We know that things in our country are extraordinarily polarized. I mean, just at a magnificent level. And I believe that the election even causes more polarization. We know that we've got a ton of turmoil with Black Lives Matters, hurricanes, locusts in Africa. I mean, it's almost like something out of the Old Testament, wildfires out west. But when it comes to the specific election, the mail-in ballots are probably what creates the highest probability for additional contention. If you look at the 60 Minutes episode that was September 20th, they put the microscope on Pennsylvania. And there were a couple key things around that. One is Pennsylvania Supreme Court ruled that drop boxes could be used and that ballots could be deemed as countable as long as they're received within 3 days of the date after the election. And there's a lot of states that are looking to either follow suit or in their Supreme Courts are looking at that right now. Behind the scenes, you've got a large number of federal and state cases that are looking at the constitutionality of all of that. So to say that mail-in ballots create additional confusion is probably an understatement. I've only heard in all the sources that I've read, I've only really heard one, and that was on that 60 Minutes episode, do an actual ratio of Democrats to Republicans on mail-in voting. Every source that I've followed believes that there will be significantly more Democrats. The 60 Minutes episode focused just on Pennsylvania, gave a 17-to-1 ratio. I doubt that federally that the ratio is that magnificent, but I do think that it leans the Democratic route. Another area of contention is the Postal Service, whether it's Trump's accusations of fraud all the way to his appointment of the Postmaster General. And, you know, there's some prevailing beliefs. And one of those prevailing beliefs I alluded to already, that more Democrats will send in mail-in ballots. And that really becomes significant in these battleground states. If you go out west, Montana, middle states, you take a look at Wisconsin, Michigan, Ohio. Then you go east to Pennsylvania, mail, southeast, northeast Maine, southeast would be North Carolina, Georgia, Florida. These mail-in ballots really become a significant point because in Pennsylvania, just in their primary alone, it was more than 2 weeks before they really knew what the outcomes were, having to be able to count all this. So whether it's the fact that it's difficult getting all the material out to people for mail-in ballots, them receiving it, sending it in good order, it being counted, constitutionality of it. There's a lot of quagmire around that. My own family experience, my mom and her sister are both in their late 70s. They sent the request for a mail-in ballot, and what they received was a registration to vote. They're already both registered. Now, it's hard to say, was it their error or was it error in sending? I don't know. But again, tons of problems around the mail-in ballots. So what are some possible outcomes? One scenario is that the Democrats win the White House, but don't win control of the Senate. I don't see that being much different from a financial market standpoint than if the Republicans maintain the White House and Senate control. I would think that you get a lot of choppiness between now and then. The LPL's research team went back and looked at previous elections and said September and October are the worst 2 months historically in election years. Most people think it's October, but September is actually a little bit worse. Investing is risky, so you just never really know that'll be repeated. But I believe that it's my opinion that you'll get a lot of choppiness, but that if either of those two outcomes occur, that once it's decided that the markets will start on their ascent again. If, however, the third scenario plays out where all three branches are won by one party, let's just say in this case the Democrats, then I believe that there's a good chance you'll see something that I dub as a tax tantrum. What do I mean by that? During the political cycle, they've commented about how they want to raise taxes at the corporate level, and then for individuals over 400,000, I believe that would be a headwind that would be short-lived but could create a tax tantrum. And if I were going to sort of sum up all this and say what's my conclusion is really simple, and that is that when you wake up November 4th, the Economist had a quote and it said, "You'll probably not know the results on election night." Well, me personally, I think you not only will you not know it on election night, but it could be weeks or even months before we know the answer to that. There's a lot of what-if scenarios as to how that could play out, but more uncertainty. We know the financial markets typically do not like that. The Economist even went through a scenario where you could see some really key races, White House, Senate, that Republicans were winning on November 4th, but after the mail-in count, they lose. And I think that would create some challenges depending on, again, those three scenarios that we alluded to earlier. As a result of this uncertainty, how we're playing it for you is we're reducing equity risk and we're waiting for the outcomes to become more clear. If scenario 1 or scenario 2 outlined happens, we'll move that money back in soon. If it is the third, we'll wait until we believe the tax tantrum is over, or at least close to over. As you know, I used that phrase earlier, cliche of sailing on uncharted waters. Investing and managing money for you involves risks. It's uncertainty. We'll do our very best to help navigate and make intelligent decisions through all that. On a personal note, I know that many of you know that Morgan, my second oldest, our oldest daughter, was married in August. And when you're going through some of that kind of stuff, it really does get you to be a little bit more sentimental. There's two things about that sentimental. One is the wedding took place under this outdoor scenery in Spartan, Tennessee, under a huge southern magnolia tree, and it was just absolutely gorgeous. The second was I just sort of contemplated many things about life, and Jermaine, to you, I want to thank you for placing your trust in our team. I've been doing this now for 32 years, and it's exceeded my wildest imagination in building relationships and what it's meant to my family. So thank you for the trust that you place in our team. We take it very seriously, and we're signing off from St. Louis office. Have a great rest of the day, and we'll talk with you after the election.